Hello everyone and welcome to another Forex for Beginners webinar hosted by forexcube.com, where we will focus more on the functionality of MetaTrader 4. I'm Christopher Smilas, the head of sales and training at swaphunter.com. I've been a professional trader and a portfolio manager for over 10 years now. I've traded and worked with numerous brokerages during this time. It's given me a deep understanding of how they work. This allows me to direct investors to reliable brokerages with the utmost of confidence, knowing that their trading experience will be pleasurable and that they will feel safe and secure. The purpose of my educational videos, webinars, seminars, one-on-one training sessions is teaching new traders and investors who want to learn about Forex and stock trading. Under my guidance, I can fast track an individual to being an independent, knowledgeable trader within a few weeks or months. I remember when I first started trading, I made a lot of mistakes, as many others do when first starting out. So this is your opportunity to avoid making your own costly mistakes. Simply learn from the knowledge I have gained over the years. It is always better to learn from other people's mistakes rather than making your own, and I think you would agree. Ethics, trust, and commitment to the client are the core principles that make Swap Hunter and Forex Cube a sustainable option for a long-lasting relationship for you to learn, grow, and succeed in this market. For me personally, there's no better feeling than providing a valued service that can improve a person's quality of life, financial circumstances, and also receiving positive feedback from them. That's one of the main reasons I do what I do. Of course, I also trade the financial markets to make money. I'm guessing that is also one of the main reasons you're all participating in this webinar and you have an interest in the Forex market. So if you register as a client of ours, you can earn money and also learn about the financial markets at the same time. If you haven't registered with forexcube.com yet, you can easily do so by following the link which will be posted in the live chat in the GoToWebinar. And it's also on our social media platforms, on our YouTube link in the description. That you'll find the link. You'll find it on Facebook and all our social media platforms. So if you haven't registered with them yet, you can find the links to do so there. Okay, so what we're going to cover tonight is what you're seeing here right now on this current slide. We're going to briefly go through sort of Forex basics, what's a PIP, tradable assets, and some other sort of basic Forex fundamentals. Okay, we'll cover a little bit about supply and demand, how the market works based on these very conventional rules. Leverage and margin. We'll cover what those two things mean as well. And then we're really going to focus very much in this particular webinar on MetaTrader 4, the functionality of MetaTrader 4, or MT4 as I will refer to it from now on. Okay, so we'll go through all of the tools, functionalities, buttons, and where you'll find how to place an order, trade orders, and so on and so forth. Okay, so that, like I said, this is a Forex for Beginners webinar, so we'll go through all of the basics of MetaTrader 4, and that's the main focus of this webinar tonight. Okay, so we'll cover some technical and fundamental analysis, which is what traders and investors use to make buy or sell decisions on the markets. So we'll look at support and resistance levels. And we'll look at fundamental analysis, which is more focused on the news and economic calendars and data releases, unemployment rates, so on and so forth. We'll also cover a little bit about risk management, and then we'll move on to the sort of last part of the webinar tonight and look at the current market conditions. Okay, so we'll cover a little bit about Donald Trump, low interest rate environments right now. We'll look at the US-China trade war and tariffs, the current tariffs that are in place on China and US, or what they're placing on each other, and then a little bit about the economic cycle and the fact that we're coming to we're very close to the end of this current economic cycle. So moving on, we're using the GoToWebinar app. Okay, so I'd like to just briefly explain to you how to use it. Okay, so if you have any questions, what should you do? Just write us a question in the live chat. Okay, that's the probably the simplest way for you to get us get our attention and get us to answer any questions that you have. Handouts, we'll try and get a handout out over to you, which is downloadable. And also, you're able to actually raise your hand. There's a function on the GoToWebinar app where you can raise your hand. As you can see here, let me just sort of highlight that with my mouse cursor here. Okay, so you can click on that button and we'll notice it, and make sure that your microphone is turned on. Okay, if your microphone is turned on, you raise your hand, we notice it, then you will be able to speak live to us, and I will be able to hear your question. Everybody will be able to hear you. Actually, you'll be live on the internet, and you'll be able to talk to me live and ask whatever questions you may have, and we can deal with it as best as possible. Okay, so I've got to get this, this risk disclaimer out of the way, okay? Because Forex trading does carry a certain level of risk. And essentially, what this disclaimer, and any reputable brokerage will, will have a risk disclaimer. Any service provider that provides a trading service or educational services will have a risk disclaimer describing the risks that Forex trading pose to an individual. Essentially, the message we're trying to get across here is obviously the bold letters you can see here in a larger font size. Just do not invest money you cannot afford to lose or risk on the markets. Okay, that is the essential message, that the core principle that I'm trying to get across here with this slide here. Okay, so we're going to move into Forex basics. So what is Forex, or FX, or Forex is actually just short for foreign exchange. Okay, now, it's a global market. Essentially, what you're doing in Forex is you're trading on exchange rates. Okay, so Forex brokerages allow you to exchange the value of one currency for another, and as they fluctuate, you can make a profit, or of course you can lose. But the idea is that you're exchanging one currency for another. Okay, so US dollar, euro, dollar yen, pound, so on and so forth. Okay, anyone can do it. It just requires an internet connection and a reliable brokerage, and obviously a little bit of knowledge. It's not something you can just dive into with absolutely zero knowledge, unless you're looking for a managed solution or an algorithm or some kind of managed account solution. Okay, so I wouldn't get into trading Forex with no education and not doing any homework. But essentially, yeah, it's open to anyone. Okay, you just need internet and a little bit of knowledge and a good reliable brokerage. It is actually the largest financial market in the world. Okay, the trading volume every single day in Forex is over $5 trillion every single day in trading volume. Okay, so it's the biggest in the financial industry. It is a global market. So we're looking at, it opens up on a Sunday in Australia and in the Far East. So China, Japan, and then it just moves over to the financial markets. It moves across over through Asia into Europe. And then obviously it just moves across the financial centers from Europe into US, and then we're into sort of different trading sessions. Okay, so basically the easiest analogy, or real life analogy, I can come up with to explain what Forex is, if you're still not grasping the basic fundamentals of how it works, is think of yourself going on holiday. Okay, so you're going to say you live in London and you have pounds in your pocket. Okay, so you've got £100 in your pocket and you're going on holiday to New York, so you need to exchange your pounds for US dollars. Okay, so you go to the airport, you go to the Bureau de Change with your 100 pounds, and you exchange those 100 pounds for US dollars. Okay, so you buy dollars with pounds. All right, so that's the first transaction. That's one transaction. You're going to get, with the current exchange rate right now, you're going to get roughly around $120 for 100 pounds. For whatever reason, you can't make the flight and you can't go to New York. You have to go back to the Bureau de Change and buy your pounds back with those $120 that you've just bought. Okay, so now there's a second transaction. So now what you're doing is you're selling your dollars for pounds. Okay, but you're not going to get the original 100 pounds that you bought the US dollars with. You're going to get around 95 pounds. Okay, so what we call that is spread. Okay, it's the difference between the buy and the sell price. The first transaction, you were buying dollars with pounds. The second transaction, you were selling dollars to get pounds back. Okay, so that is essentially how all brokerages and how the banks and how the Bureau de Change at the airport make their money. It's called spread, and it is just the difference between the buy and the sell price, which is called the ask and the bid. Okay, so what next? What is a pip? Okay, it's a word that you're going to hear a heck of a lot of in the Forex industry. All right, so what we have here is, PIP is essentially an abbreviation. It's a percentage in point or price interest point. And you can see here that it is the measurement of an exchange rate. So what we're looking at here is the euro against the US dollar. Let's take this exchange rate, which is very close to the current market price, 110.51. Okay, 1.1051 or 110.51. Now the measurement of a pip is to the fourth decimal place. All right, essentially 1,000th of a dollar. All right, so that's why we've got this fourth decimal place highlighted here. So that's what a pip is. Okay, that's what you're looking to make in Forex. You're looking to make pips, not lose pips. Make pips, keep pips, and keep making more pips. That's what you're looking to do. Okay, it is sometimes confused with tick size on certain assets in stocks and commodities. It can be, let's say, for instance, with stocks or gold, for example, you're not looking at just pips. They could be measured in points or cents and dollars. Okay, stocks and gold in particular. So do be careful to not confuse tick size and pip values when you're calculating risk management and when you're calculating how much to enter a trade with. Okay, if you have more questions about this, you can most certainly ask us on the GoToWebinar app or get in touch with us on social media platforms. Okay, so in Forex we've got multiple tradable assets. Okay, currencies, commodities, indices, and stocks. Okay, now we also have cryptocurrencies these days, becoming more and more and ever more popular. Okay, so Bitcoin, Ethereum, Litecoin, Ripple, I'm sure you've heard of many of them as they are extremely popular these days. Currencies, we're talking about dollar, yen, pounds, euros. Commodities, we're talking about oil, gold, silver, wheat, sugar, natural gas, etc., etc. There's many commodities out there. Indices, what do we mean when we say indices in Forex? When we say an index or indices is simply the plural of an index. An index is a stock market, okay? So we're talking about the FTSE in London, okay? That's the London Stock Exchange. We're talking about the S&P 500, the Dow Jones, and the Nasdaq in New York, okay? We're talking about the DAX in Frankfurt in Germany. We're talking about the Nikkei in Japan. We're talking about the ASX, the Australian Stock Exchange in Australia. That's what an index is, or that's what indices are. Stocks, I'm sure I don't have to explain what stocks are to you, but just very briefly, Apple, Google, Facebook, Netflix, so on and so forth. Okay, Microsoft, these are stocks that you can trade on in Forex, and you can make some very good profit on them. Of course, they also carry risk, as do any other type of asset. Supply and demand. Okay, that's the fundamentals of economics. It's been the fundamentals of economics ever since well, the beginning of the stock exchange and the beginning of commerce, and so on and so forth. Okay, but essentially supply and demand. It the basic rule is that you want to buy low, sell high, buy low. I'm sure you've heard that, those phrases before, especially buy low, sell high. Perhaps not sell high, buy low as much, because essentially, supply and demand is if there's an oversupply of something, the cheaper that specific asset becomes. If there's an undersupply of something and there's more demand for it, the more expensive it becomes. Okay. But with Forex, the reason I mentioned sell high, buy low is because what goes up must come down, and what goes down must come up too. And as I mentioned with the Bureau de Change, there's always two transactions going on in Forex. Okay, so you're buying one currency against the other, and then you're closing a trade, which is essentially selling and buying the other one on the counter exchange. Okay, so that's what I mean. So back to sort of supply and demand. Oil is the probably oil and real estate is the most classic example I can give you, or the best real life analogy I can give you in terms of supply and demand. If there's a lot of oil being pumped out of the ground, the cheaper it becomes. The less oil there is being pumped out of the ground and the less barrels of oil there are available, the more expensive it becomes. Okay, that's very simple. The same as with housing. The more houses that are being built in your neighborhood, the cheaper that they become. The more that people are buying and the higher the demand, the more expensive that these houses become. Okay, so quantitative easing is something that is come around since the last recession. Okay, 2007, 2008, quantitative easing was invented, or kind of introduced by the central banks in order to deal with the last recession. So QE is something you should pay attention to, as it is in the headlines at the moment, on CNBC, Bloomberg, Financial Times, Wall Street Journal. Have a look. If you Google quantitative easing, I'm sure you're going to come across hundreds, if not thousands, of different articles. Okay, and we can talk about it a little bit later on. Now, leverage trading. This is essentially leverage. Look, is a feature that's offered by Forex brokers. Okay, now think of it like a loan that doesn't have to be paid back. All right, and essentially what it does, it helps traders to trade or control larger trade positions with much smaller account capitalization. Okay, what I mean by that is that you can invest $1,000 into or fund a trading account with $1,000, get a leverage from your brokerage of 1 to 100, and be able to control $100,000 of trading volume. So 100 times 1,000, 100,000. So you've only got $1,000 of account capitalization. Okay, but with the leverage, you're controlling 100,000. It is a double-edged sword. It increases the value of every pip on each trade, which means that you can make a lot more money with higher leverages, but it also means you can lose money a lot quicker with higher leverages. Okay, so do be careful how much leverage you use based on your capital or account capitalization. All right. It allows you, the higher the leverage gives you sort of, now I don't want to go into too much detail on this point, because it's a little bit complicated for beginners. Okay, it does increase free margin and margin levels, okay, when you have a higher leverages, but like I said, it's a double-edged sword. It increases your room to maneuver around the markets, but it can increase your winnings, but it can increase your losses without correct risk management. Okay, so my next point is very, very clear. Okay, use correct risk management when using high leverages, as it increases your risk. But with no risk, low risk, there's low rewards. With high risk, there's high rewards. It just has to be managed correctly. And Swap Hunter and Forex Cube, we're always at hand to sort of, point you in the right direction, how to manage risk, and what is the correct sort of leverage level for you if you want to use 1 to 50, 1 to 100, 1 to even up to 1 to 400 leverage. Okay, so it's up to you based on the amount of capital that you have. And you can get in touch with us and ask us, listen, I've got $100, I've got $100,000, I've got $1,000,000. What leverage should I use? What sort of risk management approach should I take towards the markets? And we're always here to assist you in kind of pointing you in the right direction in this aspect. Okay. So now we're going to go into MetaTrader 4, which is the main sort of focus of this webinar, and I'm just going to very slowly walk you through all of the tools, functionalities, buttons, and options, menus, and so you can understand much better how to use it. Okay, so when you open, and I'll stress again that if you haven't got a MetaTrader 4 account, go and use the link, the Forex Cube sign up link, and get yourself a demo account. If you're not quite ready yet to start trading live with real money, you can always get a demo account with virtual funds where you can practice, learn strategies, get in touch with us, ask us questions. We can give you a bit of coaching, training, education, and just get you up to speed, get your confidence levels up so that you can then, if it's not for you, it's not for you. But if we can point you in the right direction and you have enough concentration and enough time, let's say, to put focus into this, then you could always, get your confidence levels up and open a live trading account and start making some real money. So if you were to download MetaTrader 4, this is essentially what you'd be faced with. Okay, you'd be looking at something very similar to this. So you would be looking at, let's say, euro US dollar. Okay, we have here in the top left hand corner this chart. What we're looking at now, I'm going to maximize this chart. Okay, what we're looking at here is a bar chart. Okay, I'm going to zoom in like this. Okay, so not that many people use bar charts, okay? But when you do open a MetaTrader 4 account, you may find that the default settings will show you a bar chart, okay? What most traders do in Forex and what they use most is candlesticks, okay? And you'll find the ability to change from bar charts to candlesticks here. Okay, so this is the most common, chart setting that Forex traders use across the globe. They're called candlesticks. Okay, each one of these candlesticks represents a particular time frame. In this case, they represent 1 hour of time each. Okay, so what we're looking at here in total is something like 2 days worth of trading. Okay, we're looking about 48, maybe 3 days worth, 76 candlesticks here. Okay, 76 hours, 48 to 76 candlesticks, each representing 1 hour. All right, and if you hover your mouse over the candlestick, you'll be able to see the time that the candlestick opened. You'll be able to see the open, low, high, and the close. Okay, so the time it opened, the open, the high, the low, the close, and the volume that this candlestick of trading volume that it sort of took up during that time period. Okay, so these are all things that we covered actually in our previous webinar, how to use candlesticks and specific candlestick patterns, chart patterns, in order to be able to predict the markets, when to buy, when to sell, using support and resistance levels. Okay, but you can check that out on our YouTube channel, the Swap Hunter YouTube channel. You can change the time frames, obviously. Okay, so very high frequency traders, you might call them, or scalpers, they're also known as, will use very low chart time frames. So you can, make each candlestick represent just 1 minute. Okay. So you'll be looking at making some very quick trades and not holding the trades for very long. This is what scalpers and day traders do. Then you have, each candlestick representing 5 minutes. You also have 15 minutes, 30 minutes, 1 hour, 4 hour, and the longer the time frame, okay, you'll notice the longer back in time we can see. Okay, so let's go back to, let's say, a 1 hour. Or let's go right down to the bottom, 1 minute. We're still in the same day. Okay, so we're looking at sort of 45 minutes worth of trading here. All of these candlesticks representing 1 minute each. Yes. So 5 minutes, we're going slightly further back in time. 15 minutes, even further back in time, back to the 10th of October. 30 minutes, each candlestick is representing, we're going back to the 9th of October, so on and so forth. 1 hour, 8th of October, 4 hours. Now we're really going to go back in time. 1st of October, day charts, 19th of August. Now we're looking back to, okay? 1 week. Each candlestick is representing 1 week of time period, okay? So we're going way back to 2018, 25th of November in this case. And even further, 1 month. So what does this mean? What it means is that the short-term trader is using a 1 minute chart to get in and out of the market very quickly, okay? He's only able to analyze 45 minutes of previous market price action. But let's say a long-term investor, he's looking way back. He's looking back to 2013, where the euro dollar was at, well, a very, very high level of 1.3923, okay? Now, I might just add here that you'll be able to notice that on the axis here, the vertical scale, the vertical axis, that you can see 5 decimal points, okay, after 1.3923, and then you have a 5th decimal place, okay? We call that a pipette, okay? Generally, only short-term traders really pay attention to pipettes. Most Forex traders are only looking at the 4th decimal place, and they're looking to make 1 pip, 20 pips, 10 pips rather, 100 pips, 1,000 pips. 1,000 pips is a very, very big movement on the euro dollar. It doesn't happen generally in a day's session. It would take very big data or very big sort of fundamental event to cause a 1,000 pip movement on the euro dollar. It doesn't happen every day, as you can see. We're looking at a range here since let's say 2015. We would go, I mean, even in a month, I mean, you might find 1,000 pips, but generally no. I mean, you're looking more at sort of, let's hover over this candlestick, and we'll see again. Let me just reiterate that you'll see it opened at 111.83, and it closed at 107.40. Okay, so it opened higher than it closed. All right, so 1.1183, and it closed at 107.40. So we're talking about 400 pips from the open to the close within 1 month. So, of course, a 1,000 pip movement, even in 1 month here, we're talking about 400 pips, a 400 pip range, we would call it, okay? Maybe from the high and the low, it'll be a little bit different, okay? But still, it's not going to be 1,000 pips. We're talking about 112.40 to 104. Okay, so it's 800 pips. It's close, but not quite 1,000. Okay, so 1,000. What you're looking in these days. Okay, so let's look at a day chart. So I'm going again. I'm changing the time frame on the euro dollar here. Let's have a look on average. Okay, on average, we'll see the biggest candlesticks. Okay, so let's say this one, this one, this one, this one, this one, this one. Okay, now let's have a look at the high and the low, or the range. So 110.60, 109.63. Okay, so it opened at 110.57, closed at 109.87, but let's just focus on the high and the low. So the high was 110.60, 109.63, about 100 pips. That is an average movement at the moment for the euro dollar. Again, let's have a look on a bullish candle. This is a sort of downward bearish candle, we would call it. Again, refer to our YouTube page, the Swap Hunter YouTube channel, and have a look at our previous webinar explaining everything about candlesticks, okay? There's a lot more detail about it in that webinar. And again, here you can see, okay, the high is 110.37 and the low was 109.68. Again, 109.68, 109.37. From the high to from the low to the high, we're talking about 80 pips here, around 80 pips. All right. So, like I'm saying, this is your daily average. The daily average at the moment is around 100 pips. So it's a good target at the moment for somebody to say, all right, okay, I'm looking to buy or sell the euro dollar for the day as a day trade for a 24-hour period, even less, but let's say for the day, to make 100 pips. Okay, depending on the account balance and equity, depending on the amount of leverage that you have, the amount of profit that you're going to make on those 100 pips will vary. Okay, so the higher the leverage and it's a successful trade, the more profit you're going to make. All right, the bigger the trade, the bigger the leverage, the bigger the risk, but the bigger the reward as well. Okay, now I must reiterate, that leverage is a risky thing, but it can work for you or against you. All right, so basically, I want to just go through all of the different ways. I'm going to minimize the euro dollar chart now, and I'm going to go through all the different ways. There's maybe one or two, or maybe many ways to do the same thing in MetaTrader 4 or MT4. Okay, so let's say that you want a new chart. All right, so you could click on this button here, one of the first tools, create a new chart. If you wanted Euro US dollar, we have that already here. But let's go and open a pound or Great British Pound US dollar chart. Okay, so now we've got 5 charts, as where we just had 4. Now we have 5. Okay, so this new chart has been opened for us. You can minimize it, you can maximize it, okay, full screen it, and you can go through all of the different sort of assets here. I mean, you could choose, like we just did, pound dollar, US dollar, Swiss franc, gold, New Zealand dollar, US dollar, the euro against the Canadian dollar, the Great British Pound against the Canadian dollar, so on and so forth. Euro Aussie, Euro Swissy, Euro Pound, Euro Yen, Euro Kiwi, Pound Aussie, and then you can go into CFDs and open up indices and some commodities, Bitcoin here as well. So that's how you would open, let's say, a new chart. There is another way which I'll show you now. You can open what we call Market Watch, where you have all of your assets listed. Now, sometimes you need to right-click on Market Watch and click on Show All. Some traders, they don't list every single one of their tradable assets until you do that. So sometimes you need to do it. But anyway, another way of opening a new chart is opening the Market Watch. And then simply looking through the list, selecting whichever currency pair or asset, commodity or index you're interested in. Let's say Bitcoin, you're interested in Bitcoin. All you need to do is drag and drop. Now, if I was to drag and drop it here, it's going to replace the Euro US dollar with Bitcoin. Okay, I'm going to minimize that pound dollar chart just to get it out of the way. Now, what I've just done there by dragging and dropping Bitcoin onto this chart is I've replaced the euro dollar now with Bitcoin against the US dollar. Now, I didn't want to do that. That is, you can do it. It depends. It's up to you. But let's show you another way. Okay. So let's go back and look at Bitcoin. Drag and drop. If you want a new chart, just sort of drag it sort of up here so that you're not on any of the charts. Okay. So just somewhere where you're not dropping it into an existing chart. If you want a new chart and an additional chart, do that. So you've dragged and dropped it somewhere up here, just not on another chart. And now you have 6 charts. All right. So now we have Bitcoin as well. So we've got a new chart with pound dollar, a new chart with Bitcoin. And again, obviously, we have all the same functionalities, time frames, and all of that, which we've been through already. Okay. So, that's how you can open new charts. Again, if you want to look at the Euro stocks, okay, that's the the major sort of European index, 50 biggest European stocks. Okay, you've got your Australian index, France, Germany, the DAX, Hong Kong, Japan, Nasdaq. Okay, so these are all. This is the Dow Jones, FTSE, and we have oil, Bitcoin, and many other assets to trade, as well as commodities, so gold, oil, and silver. Okay, so that's how you open new charts. Okay, now we also have a very important, let's say function here. Now, let's say if I was to close MetaTrader 4 now, which I'm not going to do, but if I was to close it, I could lose the way. Let's say I like all of these assets. I'm interested in all of these assets. This is what I want to trade on. I want euro dollar, dollar Swissy, dollar yen, Aussie dollar, pound dollar, Bitcoin. I want all of these saved. I can save it as a profile, okay? So save profile as, let's say for instance, my profile. Okay. So you can save it as my profile and it will be saved here. You can reopen it anytime you like. Go back to default. There's different charts there. British pound, different settings, different charts. Okay. But then we go back to my profile and we sort of pick up exactly where we left off. Okay. So that's essentially sort of opening new charts. Market watch we've covered. Navigator is also very important. This is where you're going to find indicators, different trading accounts that you have. Okay, live trading accounts, demo trading accounts. You're going to have indicators that you can use. This is what we're going to move on to next, is indicators. All right, so let's say we want to throw some Bollinger Bands. Okay, Bollinger Bands we can always cover in more detail, but I can't go into too much sort of in-depth detail right now. In this particular webinar, this is simply how to get Bollinger Bands onto a chart. Okay, so onto my euro dollar chart, I want Bollinger Bands. So I simply drag and drop. There are some parameters I can change. But this is for more experienced traders, periods, time periods, so on and so forth. You just click OK. And now we have, as you can see, Bollinger Bands. The way Bollinger Bands work is quite simple. You have a sort of simple moving average through the middle. Okay, this is your median average of price action. Then you have an upper Bollinger Band and a lower Bollinger Band. In an uptrend, which this is in, if the price action breaks through the top of a Bollinger Band, you're going to see a reversal, as you're noticing here many occasions. Okay, so these are good sell indications. There are many indicators I can go through, that are available on MetaTrader 4. Many indicators, as you can see, including our swap hunter indicators, okay, which we have videos about on YouTube, and you can also ask Forex Cube about swap hunter, and the way that we use our product in order to predict the markets and manage risk and trade the markets. Okay, so moving on, we're going to have a quick look at the terminal here. Okay, so we've had a look at Navigator, we've had a look at Market Watch. Now I want to focus on terminal. Okay, now terminal is where you're going to find your open trades. You can have a look at the current exposure that you have to the market, so the current open trades, the percentages of your margin in terms of whatever your currency base is, graphical representations and whatnot. You've got account history, so trading account histories. Now in account history, you can say all history, Okay, so let's say we do that. As you can see, we've got, quite a few trades in all history. Profit and loss, your total profit and loss since the account was opened. Okay, so the initial deposits here, 50 grand, another 50 grand, and then all of your trades. You can filter them by the time they were opened, the type of trade. So was it a sell trade? Was it a buy trade? Okay, a buy trade, sell trade. Was it a buy order, buy limit, buy stop, sell stop? Okay, and then you can also filter in other ways, the size of the trade, the symbol, so which instrument it was it euro, dollar, gold, the price, stop loss, take profits, other ways, the time it closed, price, swaps. And this is what we focus on mainly at Swap Hunter, obviously, swaps, making swaps. And then, of course, you can focus on the profit that you made on each trade and filter it that way. So with Terminal as well, you can have a look at latest news headlines, alerts, mailbox, which your brokerage is sending you. You can go into market signals. There's all sorts of tools here in Terminal. It's a very, very important function in MetaTrader 4, MT4. So a lot of clients, a lot of investors get confused between balance, equity, margin, free margin, and margin level. Okay, balance is essentially, it just shows the amount of deposited money in your trading account. The profit, loss of your orders will be added or deducted from your trading account balance when you close your trade orders or when you close your trade positions. Equity is showing the it's showing the same value as balance as long as there's no open trades, so there's no floating profit and loss, or P&L as we call it. But when you have open orders, obviously they're going to be going into plus and minus, so the equity will be changing. Essentially all it is the balance minus the floating P&L. Okay, so right now I have a floating minus profit of $120, $110, let's say. So my balance is $103,539 minus 110. There you go. That's what your equity is. Margin. Okay, so margin is the amount of money that is used to open a position or trade, and it is calculated based on the leverage. Okay, so there's a formula we could put in a sort of a handout, or we can do another webinar on it and go into more detail about margin, free margin, and margin level. Essentially, it's the instrument you're trading on, okay, or the price symbol times the volume divided by the leverage. Okay, so that's the formula for margin. Free margin is just the difference of your account equity and margin used for the open positions. Okay, so essentially it's free margin equals equity minus margin. Okay, margin level, a little bit more complicated. It's a ratio. It's a ratio between equity to the margin. Okay, so margin level is very important because brokers use it to determine whether traders can open any new positions when they already have open positions. Okay, so if if you're using up margin level, if you've used up all of your margin level, you're either going to have all of your trades closed by the brokerage if you've run out of margin level, or you are going to have to start closing trades because you've over leveraged, you've over traded, you've used up all of your margin level, and you are going to get a margin call, and you're not going to be able to trade anymore. So these are really important things to understand when trading with MetaTrader 4. Okay, you need to understand the difference between especially margin level, free margin, and margin. Okay, equity is also extremely important. Balance is very self-explanatory. Okay, it's very simple to understand. All right, and you most certainly don't want to be getting a margin call from your brokerage, because that essentially means you've used up all of your equity, you've used up all of your margin, you've over leveraged yourself, and you're going to get stopped out. Stop out level, it just means that exactly what I've just described. Okay, you've over leveraged, you've used up all your margin, you have no margin left to trade with, you've got no more free margin, and the market has moved against you. Let's say you're trying to buy, let's say you've tried to sell the euro dollar here at this level. Okay, for instance, where my mouse is right now, Yeah, and you've put a sell trade here and it's going up, and then you put another sell trade and then it goes up again. You can see where I'm going with this, obviously. Okay, and we look like, it's bouncing off this middle price. It keeps hitting the upper Bollinger Band, hitting this middle median moving average, and it looks like, it's hit it again and it's moving back up. So if you had sold here, sold here, sold here, and the market keeps going up, you're going to run out of equity, you're going to run out of margin, and eventually your margin level is going to go down to whatever your brokerage sets it at the stop out level, and everything's closed and you're out. Okay. So what I'd like to quickly go over now is just a couple of different ways of setting up opening trades. Okay. So what we have here is new order. Okay, this is the most basic way of opening a trade. I'm going to open a very small trade because, excuse me, because this is a this account here is being used for our Swap Hunter clients in order to demonstrate what we do with Swap Hunter, which is essentially collecting swaps and interest rates, and that's what you can see here. Okay, so I'm going to open a very small trade. Let me show you that again. Okay, new order. You click on new order, euro US dollar. Let's go for a buy trade. Here's your trade sizes. Okay, this is one micro lot, which is a $1,000 trade. You can have 0.01, which is a $10,000 trade. Or you can have a full lot, okay, which is a $100,000 trade. All right. Now, let's go with a micro lot, okay, because I don't want to mess up this trading account. So I'm going to go for a buy. As you can see, the buy trade has just been opened, okay. What I'd like to do is show you just the same thing, but just selling. So essentially what I've just done there is hedged myself. I've done one buy trade, euro dollar. I've bought it at 1013 and I sold at 1013.2. Okay, 1013.8 was the buy, 1013.8 was the sell trade. Okay, so I've just hedged myself there. I'm not going to take any risks on just demonstrations. So that's one way of doing it. Then you also have one-click trading. If you right-click on your chart, you can activate what we call one-click trading. Okay, I'm maximizing my euro dollar chart here. This just gives you a much quicker way of trading. So again, buy. I've just opened another buy trade on euro dollar, and I'm also going to sell. Okay, so again, I've just hedged essentially at the same prices. This is just a much quicker way of doing it than going in. But, there's no need to rush in Forex. If you're using the new order button, okay, you can set your stop losses. Okay, so you can see where the prices are now. You've got your ask and your bid. Okay, now that's what I was talking about when I was talking about the bureau de change. This is how brokers make their money, is the difference between the buy and the sell price. Now set a stop loss. Let's say a 50 pip stop loss. Okay, the current market price to buy is 110.13. So 50 pips would be 110.65. Okay, let's say right now 62, but okay, roughly 50. Okay, so we've just done that. Stop loss 110.65. That would be on a sell. So let's say 50 pips on a sell. Okay, 50 pip stop loss. So I'm selling euro dollar at 1012.7. Okay, and I want a 50 pip stop loss. Okay, you can see the order has been executed with a 50 pip stop loss. That means if the price comes up to here, it's automatically going to close my trade. I know that I'm not going to lose more than $5 on this trade. Okay, it works the other way around as well. Okay, if you go into new order and you click on buy, you want your stop loss lower, 50 pips lower than the current market price. So let's say 165. Okay, 109.65. All right, and buy. So now you have a stop loss here, 50 points on the buy trade. You have a stop loss here on the sell trade. And that's how you manage your risk in Forex, stop loss orders and take profit orders as well. Okay, so you can also take profit orders exactly the same way. So you can control your risk to reward. Let's say 100 pips on a sell trade. So you want your take profit 100 pips lower than the current market price, so 109.13. All right, so you would sell. Okay, so that's what we've done. We've just opened a sell trade. Once it hits here, all right, we're going to make $10, but we can lose $5, okay, for instance, on the other trade. But this is like a 1 to 2 risk to reward ratio. And, you know, that's not a bad way to start off, you know, for a beginner. 1 to 2, you're risking $5, but you could make $10 on that trade. Okay, so that's stop loss and take profit orders. And let's just sort of minimize this chart again. Very sort of quickly, I'm going to just sort of, I'd like to cover a little bit about the different types of analysis, which I think I've done a little bit already. Okay, so essentially you have two types of analysis. You have technical and fundamental analysis. All right, technical analysis is the study of historical price action and making a speculative or an educated guess or bet, let's say, on where the market will move based on the previous prices of the euro dollar. Okay, so let's say you know, a year ago, euro dollar was much higher. Okay, now I'm using another tool here. Okay, this is the basic mouse function. We have what we call the crosshair. All right, and other sort of vertical lines, horizontal lines that you can put to represent a good sell price or a good buy price. Let's say if you want to mark these on your charts, you have, you know, sort of diagonal lines if you're looking at trend sort of patterns, okay, or sort of channels, let's say. You know, so we have all these different ways of keeping track of market price action using technical analysis, using these types of tools. Okay, Fibonacci's. It's a little bit more complicated for beginners, but I'll just give you a very brief example. You go from the highest price to the lowest price, and you'll see that they are quite effective in gauging sort of ranges and you know, gauging where to buy, where to sell. It hits this level, you sell. It hits this level, you buy, so on and so forth. Okay. Now we can cover all of these technical analyses and technical indicators in far more detail in future webinars. I'm whizzing through them as quickly as I can because we're on limited time right now. So the difference between technical analysis and fundamental analysis is with technicals, like I've just mentioned, it's chart studies. With fundamental analysis, it's more about using the news. Okay, so what I'd like to do is just pop back into the PowerPoint presentation just to show you more about fundamentals. Okay, current market conditions. What do I mean? Trump tweets, massive sort of. They have huge impacts on the markets right now, which is the first time in history. This was a while ago. It was about a month ago when Federal Reserve Chairman Jerome Powell made a speech, and Donald Trump then came in. The Fed Chairman Jay Powell, or Jerome Powell, he's the most important man in finance. Okay, he says where the dollar is going. He sets monetary policy. He sets interest rates. He sets. He just came out yesterday and said that the Federal Reserve are more open now to more bond buying, which is sort of quantitative easing. I'll cover that in a bit more. But last month, what happened was he came out, made a speech. He said, "Yeah, you know, we're going to be more accommodative. We're going to print more money, be more accommodative for the markets and big corporations." Then Donald Trump came in and just tweeted something which was very negative, and the market dived. Okay, so that's what I mean. You have to look out for all sorts of you know, really important fundamentals, you know, sort of factors these days. We're in very low interest rate environment. We've seen inverted yield curves. These are big signals or big red flags for recessions. Generally, they're quite accurate up to sort of 22 months or 12 to 22 months, 1 to 2 years. When you see inverted yield curves, you're looking at a potential recession. Okay, so that's the situation right now. Traders are very worried about it. Of course, we have the U.S.-China trade war. which is a really massive problem. Traders look for positive news, like Jerome Powell coming out yesterday and saying, I would like to increase bond purchasing and bond buying, which is accommodative and it's good for the markets. It will boost stock markets. It will send them up, and that's the idea. And then Donald Trump will come in and slap more tariffs and additional tariffs on China, and then China will retaliate. And then, what we're looking at is good work undone by the U.S. president. Okay, so these are the current sort of tariffs at the moment that are being applied from the US on the Chinese and vice versa. Okay, so it's really getting out of hand these days. At the moment, it's just the tensions are escalating. Okay, so I mean, yesterday we saw that China have now, after years and years and years of investments and all sorts of deals being made. The NBA, which is the basketball association in the United States, they've had all of their games being televised in China because obviously the Chinese like to watch basketball. Okay, they like basketball. Now, what's happened is that China have said no more NBA games on our TV channels. That's it. No more basketball on China's TV networks. Now that's a pretty big deal because imagine the amount of money that's being lost in advertising and all sorts of deals between corporations and television networks that's being lost. Okay, now then Trump comes back, blacklists several big tech companies. Okay, so like Huawei and several more different companies that they're banning or blacklisting. It's kind of a bit of a grey area, but they've just said you can't do business over here. European stocks close higher amid optimism over US-China trade talks. Okay, so we're getting these mixed, confused reports coming out of the Federal Reserve, coming out of the White House, coming out of Europe, coming out of China. 1 minute there's a tweet from Trump saying, "Yep, things are looking great." 5 minutes later, he says, "Nope, we're going to put more tariffs on." Or China come out and say they're going to ban, American basketball games in China, and then the market's all over the place. So this has been an extremely volatile month based on the fundamentals. Okay. And as I mentioned earlier, the Fed are open to more bond buying and more quantitative easing, but Jerome Powell is saying it is not QE. He's insisting it isn't QE, but I don't see the difference myself. Essentially, it's the same thing. But that is what it is. Okay. So we're coming to the end of this economic cycle. There's generally a recession every sort of 8 to 10 years, and we are very, very close. In fact, we're over 10 years since the last recession. So, traders are looking to short the markets and sell the markets. The greatest thing about Forex is that you can make money selling or buying. Okay, you can make money anytime as long as you get it right. Okay, you have to get it right. Do your research, do your analysis, and get it right. Okay. So, I'm going to leave it there, and I just want to finish off just explaining the benefits of opening an account with Forex Cube. You are looking at a brokerage that is true STP ECN. Okay. Now, just Google that if you're not sure what it is. They offer up to 1 to 400 leverage, ultra tight spreads, so you're not going to be looking at very high spread charges when you're opening your trades. You're insured up to $20,000 on deposited funds when you open an account with Forex Cube. You can have instant deposits and withdrawals. So, not many brokers can say that. Normally, it takes a few banking days, business days to receive money from brokers. Okay, and they also have automated trading solutions. They also partner up with us at Swap Hunter. So also check us out at swaphunter.com, all of our social media platforms, in order to get more information about what Swap Hunter is, how we trade the markets, and the benefits of the Swap Hunter indicator package. It's extremely easy to use. It's very unique. It's a great way to protect equity and generate interest on your trades. and we could teach you and train you how to use it. You'd probably be working with myself or one of my colleagues in order to get you up to speed if you were to buy one of our license packages, or if you were to open an account with Forex Cube. We're just about to offer a new sort of deal where you can get the Swap Hunter Indicator package for free if you open a live trading account with Forex Cube. Okay, so I'm going to leave it there. Thanks very much for taking part and attending today's webinar. Once again, I'm Christopher Smilas, Head of Sales and Training at swaphunter.com. And just get in touch with us at www.swap-hunter.com. Or, like I said, on any of our social media platforms. If you have any questions at this stage, write it to the chat or get in touch with us. Okay, thanks again and goodbye.